And Richemont is a Swiss-based luxury goods company controlled by the Rupert family, and that obviously is the South African connection here.
Correct. And as far as the market cap is concerned, it's about 35 billion Swiss francs, which is about 35 billion US dollars, which translates to
530 billion rand. PE here of 20.9 and a dividend yield of 2.6%. A lot of fund managers in South Africa have Richemont in their
they have it
portfolios.
for historic reasons or what have you. And you know, in the days when you couldn't take your money out the country, you know, the only way you could get into luxury goods was obviously to buy the thing because it's listed in South Africa. But of course that doesn't hold as an argument anymore. They have been very hard hit by the tourist thing because their core brand, the Cartier brand, of course, is known as a French brand, and it's headquartered in France, and of course the tourists aren't coming to France anymore, it's hit them hard. Their watch business one gets, and they do have the very top end brands. They do have brands that compete with the brand I spoke about earlier, but that whole market once again has been hard hit to an extent by the tourist thing. There is another argument out there that maybe they've rolled out too many of their brands in watches. Maybe they got too wide a range of watches.
While you're chatting again, let's have a look at the share price graph and we'll get a reference point there.
That's the Rand price, and that's fine. You know, that has not done much for anyone. It's been around the 100 Rand a share level. It fell back, but thanks partly to LVMH's good results, it has poked its head up into the mid-90s in recent days.
So everybody getting a little bit of a perk up there, given the better results.
But Syd is right. The watch business does look vulnerable, and we know that Swiss watch sales have been under pressure.
And their watches are manufactured in Switzerland, unfortunately, together with many of the component parts. And of course, because of the strength of the Swiss franc, that's affected their margins. It works against them because there are certain price points that you've got to stick to,
But
no
do
matter
you
where you
really think that
manufacture.
South African fund managers are starting to move away from? You say that the relationship is historical and many own it because of the legacy.
I don't think they need to keep the percentage of their funds in Richemont to the extent
Are we
that
seeing them reducing their percentage holdings?
The Rupert family.
No, we're talking about shareholders in general.
I haven't checked those numbers. So
South African investors can go global. So of course you can buy LVMH in France if you want to, but I think it's still pretty much a core holding, and most people that have them still keep them.
It is a core holding in portfolios. And one other factor I must admit that's gone in its favour is, with the exception of this year's profitability, which of course they've already guided downwards, the profits have been going up. The share price, as you can see, has been flat or going down, and the PE, which is the arithmetic multiple, has been coming down to more realistic levels.
We've got it in the hot stocks portfolio.
And so is the dividend, by the way, and so has the dividend gone up to, let's say, decent levels compared with it was in previous years.
Look, Johann Rupert, who's the executive chairman, is a very conservative-minded person. So he has always emphasized margins. He's always been quite cautious about the outlook. He doesn't get carried away by the sort of spirit of the moment. So the company has an enormous amount of cash on its balance sheet, and it's in a position to make adjustments to its business model. What it really needs, though, is for tourism to France to recover, because Cartier is vital. It's vital because it's such a powerful jewelry as well as a watch brand, and it can survive changing patterns and styles with regard to watch purchases. Because it is true that the very complicated watches which were prepared for the Chinese market have maybe gone a little too far, and that's going to be a
well, if that is the underpin to the story, do you think that tourism to France is going to pick up anytime soon?
I think it does, because you know, Paris remains the most popular tourism destination in the world. The problem is it's not comfortable for you if you think there could be some like ISIS attack or something there, but I got the feeling that these things do recede in people's
So you're still hot on Richemont?
I believe so, yes. I'm comfortable to be holding them.
You believe so, or you are hot?
No, I'm hot for
You're
sure.
hot. I just wanted to check, because...
That came out wrong.
Yes. Hot or not, Syd?
No, believe it or not, I'm actually hot on it. Maybe for all the wrong reasons, but I am hot on it.
We've got a double hot on Richemont. Let's leave it there.